So we hit my initial target for this pullback of 4,450 on Friday of last week. And now, because we've had over a 100 point move to the downside to fit the initial move of this pullback, like I just said, it is time for some form of a pop in the market, or bounce, basically a short-term bounce that is. And I'm expecting that will start at some point this week. Remember, whenever you have a lot of downside over a consistent amount of time, there's a lot of compression that builds as we continue down until a lot of that compression has to release, and you see upside typically in an aggressive manner for a short duration. So that's what I'm expecting will happen here. And that's just healthy price dynamics, especially because in order for the downside to continue, there has to be some type of release of that pressure, and then we can continue downwards afterwards, because I still have a price target of sub 4,400, although that will be hit after some form of a pop like I'm expecting right now. So I'm waiting on that. And I really like longs in between roughly 4,430 as well as 4,450, and actually added some exposure on Friday during the initial downside move that we had after the open. So I'll continue to hold that. If it decides to dip down to the 4,430 on Monday, then even better, can have more exposure to that. But at the moment, at least for the short term, expecting some form of a pop before, more downside afterwards. And do be careful, because whenever you see these initial pops after the market started a pullback, it tends to bring in a lot more bulls because they believe that the lows are in and will continue up and take out the highs that we made previously. You just have to be very careful here, because again, I do expect there to be more to this pullback after some form of a pop. In terms of my price target for the pop, 4,525 is a minor resistance. Once that's broken, then we can see upwards of 4,550 to at the highest point around 4,575. So that still would be around a 100 point move. And of course, a 100 point move is very significant, especially in a short amount of time. So watch for something like this within the next week to 2 weeks max. And like I just said, do be careful to not get convinced that this is a new rally and we're just going to continue all the way up and take out those highs from before. So just keep that in mind going into this week. Also, do want to take a second to talk about IWM here. This is a very interesting one, because if we do have that bounce in the S&P 500 as well as QQQ, which I'll share later in this video, IWM has been one of the strongest of the indexes within the past month or so. So if it does decide to follow along with the other indexes, which is my expectation just because it has a lot of relative strength, then it will likely break out of this downward trend that it's been within, at least this channel, which would mean a lot more upside. I could see even 197 to 198 to go back up to this high that it made around here, 198 high. And to be honest, because it has a lot of relative strength in comparison to the S&P 500 as well as QQQ, like I just said, we could even see this print a new high from the previous rally, because it just has a ton of pent up energy. You can just tell based on how it's in this bottoming / accumulation pattern. We saw a very strong start over here, this first hourly candle, which you can zoom in on. The first hourly candle of Friday, very strong after the gap down. That was not the case on the S&P 500, which you can just see up here. Yes, we did have this dip, the initial dip over here, and then it popped afterwards, but the first hourly candle was not as strong as what we saw on IWM up here, just because it closed very high. Then we saw consolidation afterwards, but this I characterize as bullish consolidation, only a matter of time until it does break out of this channel, and longs would be valid if we was able to break above this channel and have confirmation. Hourly confirmation is my favorite, although in this case, once it does break above, this thing's going to start running very fast. So 15-minute confirmation could be valid with quicker stops to reduce overall risk exposure. But for the most part, do watch this for this week. Again, confirmation above here is a very nice trade setup where you could see high 190s again here for IWM. Also, do want to mention over here the VIX. We had that perfect rejection off my 1760 level as well as trend line. I had both the convergence of the horizontal level as well as my yellow trend line from up here, which is exactly what I was looking for before having some form of a bounce in the S&P 500. Now that it's had a hard rejection off of here, consolidation afterwards, I am targeting sub 14s on the VIX now. I do expect this gap will fill shortly. And of course, if this gap does fill in terms of volatility, then we're likely going to see some type of supportive structure in the S&P 500 as a result. So that's my target, at least for this week, to have this gap fill, which will only help with that thesis of a pop in the S&P 500. Also, I'd like to check out QQQ here just for you guys to see, because we are within, very similar to IWM, we are within this downward trend. You can see the supports each time it's hit, which has been 4 times so far, as well as the resistance each time. We had a fake breakout after CPI. This first hourly candle was bullish and even closed above this supply zone, which typically is a confirmation signal for further upside. But remember, the market is all about probability. Even though this heightens the probability of further upside and it holding above, this next candle, this next hourly candle, negated this entire candle from before. Whenever you see fake breakouts, that means the downside afterwards is going to be even more pronounced. Just because it was unable to hold, it means that there's not as many buyers, a lot more sellers. So we did see new lows for this pullback afterwards, but again, I am interested if there is going to be a market-wide pop. If we do have a break above this trend, that would confirm more upside to, at the very least, around 372. If we can get above 372 and not negate it, like we saw last time over here, then we can see all the way upwards of 376, which is my target for this bounce. So just something to watch here, especially very similar to IWM. If it can break above the downward trend, we can see a lot more upside, 372 being the first target. And then over this, because this will act as an initial resistance, if it gets over that, then you can see 376 afterwards. So keep this in mind. Again, I do believe we are near bottom, or we had the bottom occur on Friday. So just watch this channel on QQQ as well as IWM, and of course what I shared earlier on SPX. If we have a break above all of these downward trends, then that can confirm a lot more upside for the rest of the week, potentially into the following week before further downside in the entire market. Also remember, the dark pools can give a good indication of when a bounce may occur, as well as selling, because there could be a lot of sell pressure, just distribution before, which is basically what we saw before this pullback started all the way back in the high 450s. But you can see based on Friday, there's actually fairly light. Still saw a decent amount in the 445s, like we saw 1.2 billion at 445.90, as well as 1.2 billion again at 445.42. So about over 2 billion worth of premium in the 445s. Nothing too crazy. However, it's definitely a decent amount, especially if it's been consistent throughout the week, which I'll go up here and filter, because beauty of the new update on Cheddar Flow, you can filter for previous days. So going back to Wednesday, that's the last time I did a video. You can see over here that we had a little bit larger of premium, although it was a bit higher in terms of price. If I scroll down over here, we of course had the 1.2 billion one I just showed you, 1.3 billion, 445.84. This was a separate day, 1.7 billion, 445.73. If you're starting to notice a trend, a lot of these are in the 445s, which is right about where the low was so far on the S&P 500. So that's a good sign, at least for a short-term bounce. It doesn't have to be an insane amount of premium, especially because it's shorter term, and at least for the duration of the bounce. So I like to see that, especially around that level, 445.67, 2.4 billion, a lot of accumulation, at least in my opinion, accumulation in the 445s, very tight in terms of price. There's not that much of a spread in between 0.67 to 0.90, only about a 20-cent differential. So I like to see that. This is helping the thesis, especially as long as we can maintain above 445. As I scroll down, the one I just showed you here, 1.2 billion. So all of the major prints between Wednesday and Friday of last week were in the 445s, which should give a lot of support to start off this week, again, especially as long as we can stay above it. And just to show you the mini graphic up here, all of these are near that low that we made, and we closed basically right on that range, roughly 445.36. So a good sign of confirmation, especially early on this week, would be a break above all of these levels. So a break above 446 would basically confirm that we're seeing a lot of support around this level, and you'd like to see that hold for the rest of the week if we are to see more upside. But just to quickly summarize, going back to SPX over here, there's an opportunity for there to be some form of a short-term bounce that could start this week. Of course, continue to watch key levels like 4,450, especially this range, 4,430 to 4,450. As long as the daily can maintain above this range, then we're likely going to see that type of bounce. Risk would be below this range, especially with the daily close. So just keep that in mind, because remember, like I shared earlier in the video, trading is all about probabilities. You can enhance your probability by using different variables in conjunction with each other, but at the end of the day, you always need to understand your risk before entering a trade, because it's all a game of risk at the end of the day. How much risk can you mitigate? Otherwise, appreciate you guys as always watching this video, and I'll see you guys next time on Wednesday.